Good morning, everyone. It is Tuesday, January 15th, and this is Morning Market Movers, where we do live analysis for day trading and take a look at hotspots in the markets for the day. I'm Todd Rich with Nadex. With me, Brian Caprice from Keep Trading Simple. Straight up, yesterday was quite a ride. We saw a complete washout in equities, and then at the end of the day, uh, I don't know. Right around the time that the U.S. announced that we are preparing to send troops, a fairly significant number of troops over to Europe to support NATO, we got a war rally. Markets completely recovered. I think they actually ended up slightly in the green. Just an absolute crazy volatile ride, which just sort of goes to show why, if you're looking for that short-term price action in the markets, Nadex binary options as well as Nadex knockouts could be great ways to play that price action, because it is defined risk, where you can't absolutely get blown out one way or the other when markets start making swings like that. Today, it's going to be all about equities again. We're opening in the red. So while we made the recovery yesterday, the markets since have sold off again. I think people are selling into that rally. Just again, it's some people's opportunity to take risk off going into the Fed meeting, which starts today. We'll get clear color commentary tomorrow and now the expectation is, as Brian and I have been saying, wholly expecting that they'll raise interest rates in March. And the question is it 25 or 50 basis points? We'll have to see. Do they sneak something in today? I don't know. Is it possible? Or tomorrow? I'm sorry, tomorrow. Is it possible? Possible. So we are going to take a look at the equities because we have to take a look at some interesting levels across the board. Before we jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Yeah, and you can actually see what's going on. We had that. I mean, this is the Nasdaq when we had that full V-shaped, as Brian would often call it, parabolic recovery. I mean, that was just absolutely crazy. And then since then, it's just sort of drifted lower. Let's take a look at. And Brian, I'm going to flip it over to you because we can go through some of the news. We do have one thing that could complicate things today. Is at 10 a.m. Eastern, we do have consumer confidence. And it's interesting that is coming out around those times where we often will see reversals. Right. So the word was slipping my mind. So here, Brian.
Yep.
let me flip it over to you and let's just take a look at what we got going on. But really, it's going to be all about equities today, simply because that's just what everyone's going to be talking about.
Yeah, with FOMC tomorrow, that's really kind of where all focus is going to be. And this is the same as like we would see on like a non-farm payroll on that Thursday before, how things tend to be a little bit quieter. Now we may still have some volatility today. And again, yesterday was kind of the extreme range scenario. And again, that's what geopolitical events do. And I always tell my students, we don't necessarily we're not trading the news, but again, we're if this then that, and we have to be willing to accept any type of risk that we take in the market. The one thing that you cannot plan for is geopolitical events. You don't know when there's going to be a headline, a missile fired, somebody doing something, and those are things that just happen in the market. So again, it's one of the reasons why I think that Nadex is a great product, because again, it doesn't matter what happens, right? You have that risk going into it that that's defined, and it can't be any worse than that. I know of a future trader yesterday. It's a gentleman that he occasionally emails me back and forth, and he didn't do well yesterday. With all the movement yesterday, he I think his ego got the better of him. But with the reversal in the market yesterday, it was like, oh, this is pulling back, it's pulling back, and he was trying to find an area to get short again. And unfortunately, he didn't realize that, again, the markets change, and again, being in the futures market, it was kind of risky for him. So indices are the way to go today. If you look at currencies, totally flat across the board. The only thing moving right now is the dollar Swiss up 56 in 24 hours. Pound dollar, even, a lot of news on the pound today, but minus 5 pips in 24 hours. Just not a ton of movement there as the dollar is continuing to increase again. Now, we did get good data out of Germany today. And again, it's interesting. The German business climate is actually higher than forecast, but you're still seeing the euro dollar down and the euro pound down just slightly. So, it's kind of in there. I think Europe right now is really stuck in the whole Ukrainian situation. It's they're just kind of keeping their head down. We're not seeing the same type of responses out. And again, remember, for something like this, it is more on a country by country basis, where the UK is just the UK is mouthing. Johnson's already said that we're going to talk about more sanctions soon, and if they send a troop over, we're going to contribute to any new NATO deployments. That they are definitely on board. So. UK taking a very aggressive stance with it. Russia today, and again, I think this may lead us to some of about what we're about to talk about. Russia said this morning that the U.S. move to put troops on alert does not affect our talks. Yesterday, they were more on the aggressive stance of things, saying the Ukraine is putting all those troops at the border. This is dangerous for us.
Right.
Okay. Today, they're like, yeah, the U.S., activating troops and getting them ready. Who cares? No big deal. Whatever. It's okay. So, in the ever kind of bipolar relationship back and forth with translation with Google Translator, I don't know what Russia's trying to tell us today. I don't know if they're like, we're not scared of the United States. We know you're just saying that, or what. Like I said, if this was Israel, they would have already gone across the border, because that's how Israel goes. But the Ukraine is just holding firm. We're like, no, we're going to stay here. We're not doing anything. And both sides are kind of staring at each other. So this is actually a positive today. Again, I wouldn't say that this is de-escalation, but it's not increasing anything. And again, whenever there's more troops being sent, if the opposing side is like, yeah, this is not a big deal. I mean, they could have very easily said, oh, this is war. You're going to put more troops there. Now you're definitely trying to invade. I see it. And that's the normal spin we see, not what we're seeing today.
Yeah.
So
not a lot of chest thumping, which is what they would, Putin's known for doing that, right?
Mm-hmm. So yeah, when he has to. So I think today's a very interesting setup. So the VIX is up again. Right, it's not as high as what it was yesterday, even from the open. So again, we had this really, really fast pullback, and this is what happens. You start seeing this, and this is where rallies come from. And it's up a little bit, but it's not doing too much right now. And the way that it's looking, although it's up 10, I think today is kind of set up for somewhat of a trap. Everything's in the red, so people are going to look at that and be like, "Yep, I knew it." And we still know that FOMC is occurring tomorrow, but some interesting draws on these charts. So yesterday, here's the ES, and if you remember, we were sitting actually. Let me go back to it. We were sitting. I'm actually going to put a little circle here just so you guys can kind of see. We were actually sitting right here yesterday, right? And we were trying to figure out where the bottom was going to be. We knew we had a green area, and it kind of hit that green area and bounced again and then came in base. So it broke, so we could remove that. But one of the areas that we were talking about was this 50% retracement off that original push. That actually worked out to be a decent area. That, 43.34? It hit it and pulled back down, but all it was a pullback before it launched itself higher. So let's erase that little one, and here's why. Okay. By the way, the big push, I don't know if you guys can see it. If you did do the full fib draw from the top to the low yesterday that occurred at 12:15, guess what it just happened to run into? And we marked the level yesterday. There's this basing and the push down. It just happened to be a 50% retracement
50%.
level sitting right there. So that was literally at 4 o'clock. That was the reversal point back down, and we're kind of hovering here. So, but what I'm going to do is I'm going to take these off. We'll leave the big one on there because, again, that zone is still there, even though we're reversing. I'd like to draw in the opposite direction now. I'd like to go from low to high. And when we go low to high, you will see that although there's not really anything, demand-wise, it was kind of the old level in the past, sitting there right at 43.17. You can see that the 50%, and I'll mark it off so it's a little easier to see right there. This is the 50% retracement level, okay? The way that we're looking right now, people are going to see a red open. They're going to be looking to short at the beginning, at the very beginning of the session. If that VIX starts crashing very, very fast, this could definitely be a bottom. And there will be fib traders and automated, algorithms and things like that are looking for this 50% retracement level. But particularly with where we're at now, people start seeing this go at the open. All of a sudden, we hit 10 o'clock and we're sitting right at that level. That's what reversals are made of. And again, this is just on the ES. I think looking at the NQ, same thing. We came all the way back up and it was a level. But if I draw top to bottom, top to bottom, kind of where we were, and again, it would be here. I'm just extending it across so we can see it better. You can see that we also have a 50% retracement. We do have what I would call a little wick over wick, and on a smaller time frame, that would be an area of buyers. But it is also in a similar situation. And again, our algorithm is going to start kicking this in.
Are you doing that on a 15-minute chart?
Yeah, 15 minutes.
Yeah, okay.
Yep. So again, another 50% retracement. And again, that one's getting crushed. Same thing we did here. We drew top to bottom. We did it from the previous high on the 30. the 61.8 was the turning point. And again, we talked about it, all the basing 61.8 rolled it back down again. Let's delete that off and take it off and do the same thing, low to high. And you can see we also have an area. And again, this one has a little bit more of a pullback. If I drop it to a 5, I bet you we could see it. Yeah, you can see it right there. You guys see right there that this, I think it's big enough you guys can see. You see that right there? If we mark this level off, guess what?
Yeah.
Again, guess where that happens to be? Sitting right on the 50% level. So, that's 3 different positions, all in that kind of same scenario. And then Russell, kind of the same thing. Russell had that very, we talked about this kind of bouncing and going higher. I didn't predict it was going to go that high, but it did. It ended up going off the level we talked about and dropping. The 1 to 3 got cranked right here. That was the first trade that we were looking for. So we'll remove it now because we don't need it anymore. But that was one of the reversal trades that we had mentioned yesterday with the Russell. And now we'll leave this here. We'll pull this, do the same exact thing. Hold on. Went a little bit too low. There to high. You can see what's at the 50%. Also a retracement level, right? A pullback with ascending wicks, which again is one of those things that my students know that I love. So very interesting that all 4 equities are all set up at the same exact kind of low to high 50% retracement levels that, again, algorithms and Fed traders are going to be looking to go long in those scenarios. So right now, with it kind of pushing up, remember, we typically look at these on the 15-minute. I mean, really, any of these ones, drop into a 15-minute, look just a little bit higher, there may be short opportunity at the open, right? If this rallies up just a little bit more at the open into an area of sellers, that is a short entry. But again, profit targets reversals could be coming in at 10 o'clock today, which also coincides with consumer confidence, which is expected to be very, very negative. And again, I think it will probably be a negative number, but what happens if this is a miss? What if this is a 113 at 10 o'clock this morning? These are all kind of those technical signs. Now, again, remember, typically, Fibs is not a standalone system. You're always supposed to be kind of putting it with something else. Is it the strongest supply and demand for me? Is it the strongest supply and demand, setup today? Not necessarily. But, if we drop the lower time frames, you could make a case, for each of these little levels here right at the 50%. So, I would say right now for the retail trader, it is kind of set up like a trap. Does it guarantee that that's going to be the case? No. But right now with the news and with Russia kind of backing down a little bit, I would say that there's probably a little bit more positiveness. And again, I still am a believer that I think it's going to go up before FOMC, because if you want to get short, the first thing you want to do is jack the price up so you can sell it for more money. So that's kind of where I'm at today.
So, and the vice versa goes true. If you want to go long, you want to get that.
You want to go long, you want it to drop down because you want to get it on sale. And again, everything else: oil down, natural gas down, gold down, silver down, bonds are down a little bit, cryptos are all down again. So with all the red negativity out there, I mean, the dollar's about the only thing that's standard up. Everybody's looking at this like, yup, another bad day again, another bad day to get short.
Bear trap. So, beware of bear traps. But we will see how it ultimately plays out, and also, how events play out throughout the day, because you never know. I mean, we've also got some disruptions going on in the Middle East with United Arab Emirates still having their UAE having some challenges. So, with that, Brian, by the way. I did drop the link in. If you haven't registered for the boot camp today, we are doing that boot camp today. And if you register, it'll get you access to the recordings. So please register. You'll get access to the recordings in the very least. Any questions for Nadex, please email us, customerservice@nadex.com. Brian's email, support@keeptradingsimple.com. My email is there as well. We are accessible. Any questions, concerns, things you'd like to see us do more of, do less of, we do take that feedback seriously. What are we talking about today? Really, it was all equities. We're not seeing a lot of action right now in foreign exchange. We're not seeing a lot in commodities either, but obviously the equities, massive volatility. And it's really is people trying to digest what's going on geopolitically, globally, as well as where is the U.S. going to stand with some potential interest rates. And we're still waiting for earnings to come out. Earnings have been a mixed bag. GE earnings weren't so good. IBM earnings were gangbusters. So it is a bit all over the place. We will see what the retail trader thinks in a half hour. With that, good luck in the markets, everyone. Brian and I will catch you hopefully at the boot camp today. Otherwise, we'll catch you tomorrow morning. Thank you so much for joining.